Good morning, everyone. Glad you're with me here today. This is the time of year when, folks set trading oftentimes on the back burner and are out doing family vacations. Could you imagine that? Hello, is anybody on board with me this morning? Are you guys awake? You got coffee in hand? I'm on my second cup here this morning. Haven't started it yet, but I'm about to. So we had some good movement yesterday in some of the energies, the stock indices. Right now, well, we were up a little bit earlier this morning and really not much movement. We'll look at the actual markets here in just a bit. Wanted to get started here, so let's do that. And of course, let's chat about risk. Of course, it's always very important to understand that you can lose money and you will lose some money, but know that you should only be trading with risk capital. Remember, past performance is not necessarily indicative of future results. So bottom line is just don't use the rent money, don't use food money. I say this all the time. And yet it's something that folks have to think about. And please don't. If you don't have the money yet, don't trade with real money if you can't afford to lose it. All right, that's me. Been at this for a long time. Well, actually, that guy right there, we'll be in Chicago here tomorrow. So we'll be preparing for our seminar we're holding at the end of the week, all about binaries. We're gonna have a good crowd, I believe, and it should be a lot of fun. I have three new strategies plus another approach to add to my current strategies that I'm going to share with folks that will be attending there. So it should be a lot of fun. All right, so let's take a look here at the upcoming news for the rest of the week. There are a couple of sites I like to use. One in particular I really focus on is Forex Factory. It's the one I've been using probably the longest, but MyFX Book is very, very good as well. They even offer a little audio alerts when the news pops, so it's very good. You can set it up yourself, but I'm going to go over to the Forex Factory right now, and we'll take a look at that website. So let me do that. And here we go. So again, just for those of you that are relatively new, haven't been on my program here before, I like to just filter this out. I focus on what are known as the high impact events. If you scroll down here, you can see the legend on the left side. I like those red folders. So the way I clear that all out, I come up here to the little filter, click that, and just uncheck these boxes that are up here. So only the red ones checked, then hit apply filter. And you're good. So here today, we had some news already here at 8:30 Eastern. It's about about a half hour ago. We had this news come out, and it actually affected some of the currencies. And then later today, we have Fed Chair Powell speaking at 1 p.m. Eastern, and then an FOMC member speaking at 3:30. So those will be important. Those will move the markets to some degree, just depending on especially what Fed Chair Powell happens to say. Then tomorrow we have a kind of a mixture here. We have some news early morning out of Great Britain, then Canada, and then later in the evening out of Australia. Those will be some market movers too. So if you're looking at something like the Aussie dollar, US dollar, Aussie yen, those sorts of things. And then Thursday, a little bit of news out of Great Britain, and Friday just out of Canada at 8:30. So that's the news. And again, I like to not take new positions going right into the news. I like to let the markets kind of settle down, especially when trading off these smaller time frames. I think it's really important. And that's about it for the news here today. So let's bring on the charts. And there we go. So we're going to start out here looking at the S&P this morning. And let's pull up the daily chart because you see here a contract high hit yesterday at 3023.50. 3023.50 was yesterday. And right up into that resistance zone. You'll notice I have a lot of different horizontal lines on here, just marking off other key resistance areas. But on this daily chart, if I kind of zoom in here, we have a possible shoulder, right? Well, that would be a shoulder rather than possible. We'll just call it that. This is a possible head area of a head and shoulder top that could be forming. The market's a bit extended here. Doesn't mean it can't go higher. It surely can, but it's in a range where we'll often see some sort of retrace here. Now, we had a somewhat similar pattern right here as well. Let's bring that up here for you, but kind of right here. But the difference being we didn't get that right shoulder, and the market went on to make new highs, right? And it wasn't at the highs of the chart either. So what we had here for a short bit was this double top right here. So we had this large double top, or some will call that a 1, 2, 3. Got a little bit of a move down here, not huge, about, what is that, about 60 points or so to, down, and then the bounce off of the support area right through here. The market took off to the upside. But the other thing I wanted to point out here, my momentum indicator, this this panel right here, notice how flat this has been here since actually this vertical line. I believe that was from the last week when we met. I marked off an area there. That vertical line represented that area. But so if you look at that, let's see, what day is that? That is, yeah, indeed, the 9th. So since the 9th, even though the market's rallied, it's done it on virtually no momentum to speak of. So not showing a lot of strength in that regard here at the moment. All right, so let's go down to the, I'm going to jump from the daily down to the 4-hour chart, or 243-minute chart to be accurate. I'm actually going to get rid of this zone here. So I updated this a little bit earlier this morning, just kind of readjusted the zone, especially on the upside here, because the market had been grinding, or has been grinding. Now notice on this 4-hour chart, the loss of momentum through here. My cycle study indicator has been rolling over as well. So a weakness in momentum, basically energy in the market, is this way at the moment. And so on this higher time frame, I would anticipate that if the market kind of continues to grind here, you'll notice these doji candles that are in place. Those are candles of indecision, these very, very small ones. We could see the market, let's see here, that's the best way to do this. Let's use the rectangle tool. Kind of come right in through this area here. We're not talking about a wide zone. Let's see, that's 30, 15 to 30, yeah, about 13 handles or so to get down and fill that zone in. And from this angle, you can actually, we could call this, let's see here. So we could call that a shoulder right there. So I look for these reversal patterns to form on weakness in momentum. And that could be the head right there. This could end up being a right shoulder of an asymmetrical head and shoulder top here on the 4-hour, or this is actually, to be exact, a 243-minute chart. So if that's the case, we could get a cycle back down based on this reversal pattern with a lack of momentum. We could get a cycle that continues down into here, like I was mentioning earlier, which would, the cycle study would rotate over to this level as well. So at the moment, that's what I'm seeing here on the higher time frames. Make sense? See the reversal pattern? The market's formed in this resistance zone at these highs on a weakness in momentum. Does that make sense? Okay, so from here, we're going to go down in the time frames, and we're going to look here at the, actually, before we do that, let's adjust this just slightly here. All right, so now you can see the head and shoulders on these other time frames. So here's the 81-minute chart. Again, now we have negative momentum here with our oscillator rolling over pretty strongly here to the downside. Let me go to this workspace here. Whoops, that's not the one. There we go. There, now you can see it. All right, so we have the head and shoulder pattern, a weakness in momentum. We're seeing the same thing here, kind of zoomed in on it here, the same pattern that I marked off on the 4-hour chart. And you can see how price action is relating here. Again, weakness in momentum. And I'm going to come down here to the 9-minute. So again, this market opens up at the bottom of the hour for the day session. You see how choppy it appears to be, kind of sideways. Even as actually, now that I look at this, we had this move here, and then we have kind of a megaphone pattern right through here. Generally, that if that forms at a move up, off of a move up, it's a reversal pattern, generally speaking. But you can kind of see how that has formed inside this bigger resistance zone, and also part of this shoulder, actually this entire shoulder, kind of zooming in on it here, looking under the microscope, if you will. So another bearish type of pattern in this resistance zone. And then we can come over here and look at the 3-minute. So again, this is that right shoulder that we saw off the bigger picture. So I think what I'd like to see here now is the market basically move back up 2, 3, 4 handles here, and then maybe form a double top here on this time frame, and look to possibly maybe sell some binaries. Possibly it has a ways to go to set up to do that, but that is something that I may keep an eye out for here later today within this time frame. Any questions on this market before I move on? So I started at the daily chart, identified that area of resistance, possible head and shoulder pattern. We identified a little clearer on the 243-minute chart, have a weakness in momentum on virtually every time frame. If we can get a little counter pop here for a possible double top inside that right shoulder, that may be an area to consider a trade. Any questions? All right, so I'm just going to move on to the next market. We're going to take a look here at gold. If you do have a question, though, when I'm doing gold here on the S&P, please let me know. I'm happy to help out. All right, so this is August gold, and here are the couple of zones that I've marked out already here this morning, and we can actually adjust this a little bit, I think. Let's come down here. So this is support, this is a resistance zone, and you know the market is right in the middle of that. And my momentum indicator, while it's not exactly flat, it's just below 0. It's bearish at the moment. So within this time frame, we also have this trading range right here. We have a channel in between the two ranges there. Flat momentum. The cycle study is suggesting a further continuation move to the downside here. But I like to use that again as a read on momentum, excuse me, with a read on momentum. Let's do it this way. So that is a support area right there. See that? Now, it's key to mark off, in my opinion, the way, at least based on my style of trading, it's key to mark off these support and resistance levels, because those are areas the market is likely to run into some trouble or have some difficulty. In other words, it will react when it hits those areas. Not guaranteed, but if we know that going into a move into those areas, then, and if we're in a trade, then we don't have to worry about getting all anxious and, you know, pulling the trigger, getting out, you know, messing up our trade plan, whatever it might be. Just understand that the markets tend to react at support and resistance. Here's a great example right here. So the market rallies right here and then ends up breaking down into this area here, right? Rallies again into that resistance level. So if we are long, then we know the market's going to react there. We have to either Number one, have a plan going into that, which is the most important thing. Or number two, stick with whatever our plan happens to be. But we know that it could react at this area, right? Same on the downside. Market continues to the downside. Look at that. It reacted, bounced a little bit, back testing it again. That's what I'm talking about, reaction. Reaction there as well, and so forth. So if you keep that in mind, it doesn't matter the time frames you're reviewing, whether it's a 3-minute, a 4-hour chart, a daily chart, you'll see this again and again and again. All right, so let's move down here. That is the 243-minute chart. And here's a little closer look at the price action here for August gold. You can see not a whole lot going on here, right? We had a pretty good little pop here off the news this morning to the downside, but in reality, it's only about what, $5 or $6 move. In the course of some of these days, we've had some big moves up and down. Again, look at the flatness here. Not unusual for summertime activity either. The flatness in momentum. This is the momentum indicator. All right, so my 27-minute chart. So now you can see here a little clearer how price is moving into the bottom of this range, this channel. Just see here. So again, negative momentum. So for me, so we looked at the S&P, we just reviewed that. Now we're of course looking at gold. Of the two at the moment, the S&P provides the best opportunity in my opinion, potentially. Now, if we come here and look at the 9-minute, you can kind of see a large kind of funky double bottom here. Come over here and you can see how the market put in these wicks right here at the bottom of this range. So a lot of indecisiveness. The market comes down, bounces, puts in almost a hammer candle, is now bouncing off of the lows. Very choppy. Gold follows the US dollar adversely. Do you ever look at the dollar to see how it is trending to maybe get some insight on what direction gold will move? Timothy, I don't. I just focus on the market. Sometimes I will look at correlated markets, but for the most part, that's not my style. I treat each market individually. That's a good question, though. So I don't see a lot going on here with gold stuck in this range at the moment. We do get a little $2 or $3 bounce right here off the low, but at the moment, not super excited about this. I see, a lot of lack of momentum in the market, and if anything, we have even a mixture more so under the hood here. So here we have downward momentum on these 3 upper time frames, 4 upper time frames. This one is trying to go bullish. This is a 1-minute chart, and it is. So there's a lot more noise on that 1-minute chart compared to, let's say, the 4-hour chart. So not a lot happening here for gold for me at the moment. All right, so let's take a look here at crude oil. Oh, the other thing, I did have a question here. Let me back up. I'm sorry. I saw the Dr. Dave, gold making a breakdown of news out of the 27-minute pennant. So yeah, let's take a look at that real fast. Sorry, I almost missed that. So for me, this wasn't a pennant per se. I look at pennants or triangle patterns. I'm not sure if this is the one you were looking at here. One moment. But if it was, I look at these as trend continuation patterns. So in other words, I prefer to see it form, in an uptrend. Then you have your triangle pattern, and then the market continues up from there. Or just the opposite, if the market's trending lower, I want to see the trend, and then I want to see, the triangle pattern form, and then a breakdown from there. This, for me, is sideways action, right, on the 27-minute. So for me, that's just a continuation of that trend until we get some sort of range breakout here. That's the way I look at this. Typically, I look at them, pennants or triangles, as, again, trend continuation patterns. All right, so let's take a look here at crude oil this morning. We got a few more minutes. And there you go. So any other questions about the S&P or gold, feel free to holler at me here, and I'm happy to come back to them. Jeff says possible bear flag. Which market were you looking at for the bear flag, Jeff? All right, so while Jeff's typing his response there, I'm going to go ahead and take a look here at crude oil. Actually, let's come over here to the daily. We will start there this morning. So the daily charts run up into this resistance zone here, you can see, and has done so again on a lack of momentum here. We have momentum hooking to the downside here, and the oscillator hooking to the downside, the cycle study. So what I want to do at this point is I want to come up here and I'm going to mark off an area right through here, basically at the bottom of today's candle down to the top of that current zone. We'll see if perhaps that gets filled in here. Let's see if I can get the color I want. When I say filled in, I'm talking about price moving into that ellipse and maybe coming back down and testing this support level here, that green box. So let's look at that kind of under the hood. We'll come down to the 4-hour. I'm going to skip my 729-minute chart, and we'll come down here and look at the price action. So in fact, if I back the chart up to right there, look at price action, how it had moved down to support of this 13-period exponential moving average, and it bounced. But look at momentum, complete lack of momentum and a loss of momentum too. So not a very strong move up is what this was telling me. Again, if you're watching this live and you're seeing a 4-hour chart make a move like this, you got to be, at least I got to be looking at this and thinking this is pretty sketchy, this move up. Not much energy or oomph behind that at the moment. And then you can see what happened, and pretty much told the story there, didn't it? So now the market has come down to this support area, bounced a little bit, and that's where we sit here. So what I see at the moment here, let me mark off this. See that we could even look at that as a little tiny bear flag, little trend consolidation here, a break. In fact, a break of this, we will look at these other time frames, but a break of this trend channel that I just drew, the lower portion of it, could provide a possible entry opportunity to the downside, but we have to look at this a little bit clearer here. One of the things on this chart too is the cycle study is right in the middle here, so that's not providing us much information. Now, my momentum study, you can see how we had this move down, and it was a darker red right through here, and then it's become a lighter red, almost a little bit of a white in there. That is showing a bit of a fade in the momentum. In other words, the momentum is waning or weaker to the downside. Okay, so let's move down here. Oh, let's do this before we move over. Let's sync this to our other charts. There we go. All right, so we had kind of a double topping pattern right in here as well. You can see a big one right here, and then here, kind of equal highs it looks like. And then the market sold off. We talked about that move already. So what the market has done now is consolidated with an up sloping channel, trend channel. Within this time frame, momentum is actually bullish, just slightly bullish. But the cycle study hooking down. So we found a pattern inside resistance, right? Inside a resistance zone. Now we're trying to analyze momentum and the cycle in which the market is in overall here, and that which helps filter out potential trades. So you see that ellipse that I drew here that the market may contemplate, if you will, moving down to that level. A break out of this range, though, I think is going to be pretty important. I'm going to adjust that just slightly more. So we kind of trying to touch here. We got these candles right here, and then this one candle kind of pokes through it there. All right, so that's the 81. Let's come down to the 27 minute. Okay, so we have cycled down, a loss of momentum here. See that? Price pushed higher here. So at the moment, I think that I'm going to be watching this carefully. We'll see how this reacts. There's some support right here. Horizontal support right there. See that? There's multiple touches there. So that's a key area for the market as well. So 59, let's see here, 59.38-ish, right in that ballpark, 59.40, we can call it. So if the market breaks down and out of this trending channel, that will be a stopping point potentially for the market. A better set of reaction point. So we were just talking about that support and resistance. So there's the next level right there. So that still gives the market on a potential breakout here down to that lower level, about a 30-cent move. And then of course we have this ellipse on a higher time frame analysis that we talked about, a potential move into that area because of the bearishness and some of the momentum. So again, much like we saw on the prior chart here, we had, kind of a channeling market. We have that the case here with this upsloping channel. Let's look at momentum here to get a little clearer take on it from the big picture. So bearish, bullish, boy, that's bullish, but just on the verge of going bearish. This is bearish. This is bearish. So we see the upsloping channel. That's why I talk about a potential break out of that to the downside could provide that entry opportunity. Even better, here's another thought here with this going forward here after I log off this morning. But like looking at this 3-minute chart, see again, these lines here are part of that trend channel. Even better would be to see the market bounce off of here, rotate back up another 40 or 50 cents and double top inside this range, inside this trend channel, and then potentially look for a shorting opportunity there, right? Because if I look at this, for instance, off the 3-minute, I don't want to be selling into a cycle, what could be a cycle low, because that's typically where the market reacts. Now, of course, we have that on different time frames, but I'm going down to one of the lower time frames. So I'd much prefer to see this come up like this, which would line up with something like this. Right? Because remember, overall, these higher time frames, we have kind of this bearishness going on. It's not completely confirmed yet because this one and this one have not flipped bearish yet. They're on the verge of doing so. So this will take some patience to watch this. I think last week, if you go back and watch last week's session, I talked about the market moving into a couple of different areas. I think it was on the S&P and gold. If I'm not mistaken, the markets did that. Then it wasn't a completely to the tick call, but it was pretty darn close. And you can learn from the analysis there as well. But so this is kind of what I would look for here. If we don't get this bounce off of support here and the market does break out, so let's talk about that. That's the alternative entry. I'm going to blow this chart up. So if the market does not bounce off of support down here, let's say it breaks out, I'm going to look for it to break out and react at that gold line. In other words, bounce and maybe come back up and test this blue line, which is the bottom of that trend channel, and then hook over. So that would allow things to come down like this and something like that, and then look to get short wherever that is, or just in this case to sell binaries. Does that make sense? So you see here, this just takes some patience, and that's one of the things I was chatting about yesterday with my private course members is that, one of the biggest problems traders have is lack of patience. You try to rush in, you know, fear of missing out, that sort of thing. So you have to train yourself to sit there and be patient. It's not the headline news. In other words, we're not getting a new story every 5 minutes. We actually will get a new story every 5 minutes, but it doesn't mean we want to trade that story, if that makes sense. Yeah, let's go back to gold there. I don't see any questions on crude oil after the triangle here. Megaphone. Bear flag. See, we were looking at this chart here, Jeff. The triangle pattern. I don't see a bear flag here. I was just seeing this. And is that what you were chatting about? Your question? Even on the smaller time frames, I don't quite see a bear flag. All right, well, I think that's going to do it for today, folks. You'll see here the stock indices have just opened up. Not much happening here at all. Look at the percentage change here. Not much at all here going on. If we come down here to the forex pairs, you see the pound dollars. Looks like to be the biggest mover. We do have silver up 1% on the day. We also have natural gas. Let's just take a quick look over there. See the movement. So breaking down here in natural gas. Yeah, so a lot of weakness here as far as momentum goes. So look at this chart compared to the others we've looked at. Pretty clear what's happening here, right? Bearish, 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 bearish. And then we come to the 3 minute. We're just getting a little bit of a retrace here. So I'll be watching this one as well today for possible retraces and then continuation of the downtrends. So there you go, folks. Hopefully that's helpful. Have a great rest of your week. Yes, thank you all. Love Chicago. It's a great city. And we're going to have a great time. And for those of you that are planning to be at the seminar, I know some of you are planning to be there. I recognize some of the names. Look forward to seeing you there. We'll have a great time as usual. And have a safe flight, safe trips, and everybody else, all the best to you as well. Hopefully you picked up a couple nuggets in. It's really about, you know, when I come on here, I'm just trying to analyze the markets and kind of give you my take, but not so much that you want to take trades off of my analysis, but more so that maybe it can help you, even if you don't have my indicators, you can use the parts or bits or pieces of the style and even pick up some nuances to maybe help you down the road as well. So hopefully it's helpful. All right, everybody, I'm Jim Prince. God bless. Have a great one. We'll see you again next time. Take care, everyone.